Okay, so welcome to the second session. Now, this session, what I want to just look at in this session is how to identify entries, what to do, how to enter the market, rules and conditions that are to be met before you can take a trade. Some of us trade on the higher time frame, 4 hour, daily, weekly, monthly. Some scalp, but whatever time frame you want to trade in, this strategy is for you as well, because market happens on whatever patterns they happen on all of the time frames, but we tend to try to trade the higher time frames because they tend to be much more accurate. They are more accurate than the smaller time frame, and unless you're scalping, just want to jump in and jump out. Now, this strategy, there are conditions to be looked at before you can actually begin to trade, enter the trade. We have the higher time frame conditions and we have the lower time frame conditions. So the higher time frame conditions need to be met before you can take a trade on the lower time frame. And by the lower time frame, I mean, for instance, if your higher time frame is your daily time frame, maybe your lower trading time frame will be your 4 hour time frame or the 1 hour time frame. If your higher time frame trading is your 4 hour, maybe your lower time frame would be your 1 hour or your 15 minutes. If maybe your higher time frame is the 1 hour, your lower time will probably be the 15 minutes or the 5 minutes. So it's really entirely up to you, what is your higher time frame. So these conditions, you must make sure you see them on your higher time frame before even deciding to take in a trade on the lower time frame. And the first of these conditions is the retest of structure. The retest of structure. What does that mean? That means that as price is coming down, okay, let me come from here. As price is coming down, it came down here, moved there, then dropped. What did you see it do? It broke out of that level that it got to before and then retested it. Let me draw that out for you. So this is what you need to see in the market. This is what they call retest of structure. Okay, try to make that thick. Okay, so now look at what happened there. Excuse me. So price broke out of that level. It was initially support, right? But when it broke out, what did it become? Resistance. Support becomes resistance. Resistance becomes support. The same principle. So this is what we are talking about. So that breakout, it broke out of that support where it was initially a support. It broke out, and what did it do? It became resistance. Remember what I always say: break and retest, then drop. So this kind of thing is what you need to make sure that you see on the higher time frame. See, the same thing would happen somewhere here too. The exact same thing if you were doing the other way around. You see, support before, when it broke out of it, it became, resistance before. When it broke out, what did it become? Support. It was initially resistance here, but when it broke out of it, what did it become? Support. So that's an example of what is called the retest of structure. So it came in and tested that structure. Normally you see me do something like this when I you see me do something like this, remember? Oh, so it needs to be this, and then yeah, you see me do something like this. Now where's my stuff? Okay, yeah, you see me do something like this, so because I expect it to come out and probably on that level, somewhere around here. Yep. So it broke out, resistance became support. You'll notice the same thing around here. Should just Okay, that's an error. So I need to see that too. Okay, so you see, initially support, but it became initially resistance, but it became support. This one too, initially support, but it became resistance. So that's an example of what we call structure, break retest of structure. So a resistance drop, then broke out again, became support. Resistance was resistance. What happened? Dropped, broke out of it, became support. So that zone became support. Yeah, so again, you normally see me draw a faint rectangle around it. Rectangle around it. There's my tint. Okay, so just always look out for that. You see example of something like that in the markets every time. See, initially, what was it? Was initially what? Resistance, but when it broke out, what did it become? Support. And when it became support, what did it do? It jumped. You see, it retested anyway, but at the end of the day, it went up. You know, so same principle. Support became resistance. That's exactly what we are talking about for that one. So this rule condition needs to be met. You need to see this on the higher time frame before you consider taking a trade, or by taking a trade, meaning before you go down to your lower time frame. If you were trading the 4-hour time frame, make sure you see this on the 4-hour time frame before going down to your 1-hour time frame to look for a trade. You need to see this happen. So if I need to see this kind of thing, this is what I mean. I need to see this happen, this kind of thing happen here. So it breaks. It was initially a resistance, right? It broke out of it and it became support. So once I see this, I can now go down to my 4-hour time frame to look for a trade somewhere around here. That's what I mean. Okay. So the next one is a retest of support and resistance, support and resistance, support or resistance. Now, what do I mean? Another example, look at this. Now, it may not be this perfect. This is perfect because I drew it by hand. It may not be this nice. Of course, you guys know that it's not always the market doesn't always draw itself perfectly. Doesn't give a perfect zigzag. So this is what I'm looking for. See that it broke resistance, became support, became resistance, and then what did you see? A retest. Yep. So once I see a retest, I'm looking for an entry opportunity. Once I see a retest of that same zone that has been initially tested, it tested here, right? Why is it giving me black? Me red. So it tested here. Sorry, this needs to be thick. Had that, and then retested it. Retested the resistance. There's a retest happening here. Yep. So support as well. The same principle for support. Yep. See that? That's an example there as well. Retest of support. Where is it? That's that one, and then support gets retested. Another example would be here, retest of support. So I tested it there and then retested it here too. That's another retest of support. So what you're pretty much looking for, when it comes back to this, you see it coming down. You'll notice, okay, it's already been there before. So if it comes down, you're probably looking for an entry opportunity at this point, because you know that either it's going to jump, or it's going to drop or whatever. But all of that, this is just to show you what to look for before you enter the market. Once you start seeing something like this, you see this happen, then you can now drop down to your smaller time frame either your 4 hour if you were in the daily, or your 1 hour if you were on the 4 hour time frame. So these two conditions must be met before you even consider looking for a trade or dropping down to your lower time frame. Yep. So you will notice that anytime I take it, before I take a trade, I always I draw out zones. I need to see all of them zones, clearly before I considered. I did that today. If you guys were paying attention, first of all, I identified the different zones that I'm seeing where market kept turning or where it broke out. So when I identified that, then I now started drawing out the lines of where I think it's going to go, where I think it's going to turn out, all of these lines. So that's what I'm trying to do right now. So the next thing, after I've identified the first two conditions, there are actually three, but there are three conditions, but this one, the third one is the breakout condition, but I don't want to touch on that today. Let me just touch on these two. So after that, I go to my smaller time frame. So I need to find out. Now, before I even begin to trade that time frame, I can decide to enter the market aggressively or conservatively. If I decide to enter the market aggressively, meaning I'm not waiting for more order confirmation, order conditions to align, I just want to enter aggressively, then what I need to do is to look for a higher time frame engulfing candle. You guys will hear me talk about engulfing candle a number of times. So look for an engulfing candle. Now, what does that mean? So if I decide to trade this trade without even dropping down to my 1 hour, to my 4 hour, if I'm coming from my daily, if I saw these conditions on the 4 hour time frame, let's say I saw these conditions, the retest of structure, retest of support and resistance. If I saw it on the 4 hour time frame and I want to enter the market aggressively, what do I look for? I'm looking for an engulfing candle. An engulfing candle. And what does an engulfing candle look like? I already drew it here. An engulfing candle would always engulf the previous candle. Now, take note. What I used to struggle with this engulfing candle at one point, because sometimes some people would say that it needs to, everything, all the including the shadow, needs to totally engulf the previous candle. But what I've learned, what I've learned is that it doesn't necessarily need to engulf the wick as well. This could just happen. This could happen. This could happen. We can see this. But as long as the body is inside the body of the engulfing candle, the one we call the engulfing candle, the red candle, then that's valid. You may even see something like this. That's still valid. Yep. You may see something like this. Hold on. Excuse me. I'm using my design tool to do this. You may see something like that, or maybe something like this even. Just that's a value. That's a weird engulfing candle. Okay, I'm just gonna leave it. Forget the design. So you may see something like this. That's still valid. Why? Because this body is totally inside this body. So that's an example of an engulfing candle. Let me bring this down. So even though it's like this, hold on. So even though it's like this, as long as the rule to look out for, as long as this candle closes below this candle, it's inside this, it closes below it. Now that's the total length of this candle is higher than this candle. That's an example of an engulfing candle. Let me show you examples when we come on here. Let's see. Example here, number 1. This is an engulfing candle. This one right here. This one, because as you can see, It totally engulfs this next one. This one too is an example of another engulfing candle. Look at this. This is an engulfing candle. That one is, you know. This one is an example of an engulfing candle. This one here. Why? Because it's totally big, larger than this candle. What else? What else? Which other one? Yeah, this is another one. Engulfing candle. As you can see, it's large, way larger than this one. Yep. Let me look for another one. It's an example of an engulfing candle. It's way larger than this one. Yep. So those are examples of engulfing candles. Another one is just a small one as well. This one here. This one totally engulfs this one. So that's an example of engulfing candle. So if I'm to take a trade, if I want to enter aggressively, what am I looking for? I'm looking for I'm gonna delete all of this. Okay, so what am I looking for? I'm looking for an engulfing candle. Take this off. I want this. Now this broke out of here, right? Retested, and I'm saying, okay, good. This will be my. I'm gonna enter this trade. What am I looking for? This is what I'm looking for. I'm looking for this kind of setup. The market. Looking for this setup. Remember that's going up, so you need to look for a green candle. Yep. And then I'm looking for a red candle. So that is what I'm looking for in the market. So once I see this at that point, this is my aggressive entry. I wait for it to close, then I enter my trade at this point. After this candle closes, that is where I enter my trade. Bring that up. The tool is not very user friendly. So I enter that, and then my stop loss would be somewhere around here, maybe about 20 pips from the low, from the high of that candle. You know, probably somewhere around there, or maybe take it back wherever I want it to be. I would definitely get some other places. So I will enter here. This would be my entry at the close of that candle. Yep. And then your target would be always the same principle, the next level, the next available level. It could be this one here. You know, could be this one here, because that's the next one. That's probably going to be your first target. Could be this one here. Then the next one will probably be this one right here. Why? Because it's the next one after this, where this guy turned back at. So it could be at the turn back position of this guy to be your very first H1 when you target one T1. Then if it breaks that and drops down, the next TP will be this one right here. Forget about the right now, because this does not exist. So it will be this one and then this one right here. Yep. So and that's always a question of a function of your history. What is happening? What happened in the past? Where it got to in the past is where you will take your TPs at. So your immediate TP will be where this guy stopped. Yep. So I give you a typical example. Let me see. Now let's take this trade for example now. So it broke out, right? So they break out, and you saw that retest. Yeah. And then what happened? I had that come, and then I decided, okay, let me wait for it now. I'm still on my higher time frame, my daily time frame, and then I wait for it, and then they form this candles are forming. The moment this candle finishes forming, because it becomes an engulfing candle. See, it's an engulfing candle. The moment it stops forming, I take my trade here. This will be my entry. This will be my entry. This is aggressive, entering aggressively. That will be my entry. And this will be my stop loss. maybe about 20-30 pips away from the top. Yep, 20-30 pips away from the top. I expected this thing to show. Okay, so I'm just gonna leave it there. So that will be my first entry. My entry. I'll take my entry here. Then what will be my first TP? You guessed it. Where this place was, where this guy turned at. I will take my first TP here, and then if it continues going, I will take my second TP where it got to before, which is somewhere around here. If you notice, this is the first place it got to. It would have got. I would have taken it. Probably would have taken it here. Put my line here. You know, I put my line here, but there was some form of reaction here as well. So you notice what happened. It actually got there and then turned. So we enter, we put our stop loss in, and we protect our money. I've taken my first TP. I'm heading to my second TP. What is my second TP? This place that I have identified. Although it threw a weak pin here, but it's not important. I've already taken my TP here. So that's an example of an aggressive entry. An engulfing candle. It closes. Once it closes, you enter your trade. Your stop loss will be here, and then you ride it. So even though the next candle comes in and starts going back, it's all good. It's perfectly fine as long as it doesn't go back to your stop loss. But even though it goes back to your stop loss, it's fine. That's why you have a stop loss. I can just count that as a lost trade. Then look for another opportunity to enter. But if it starts pulling back, it's okay. Allow it. It might just go up to this point and then drop back. So you take your TP here and then move your stop loss. Either you probably enter two positions or you enter 0.2 or 0.3. Okay, no problem. Yep, you enter the next one down to the next TP. Yep, so that's that one. An aggressive entry. You do the same thing if you are going to this other side as well. A retest. Let's assume this was it. If we are bullish, let me delete this. Okay, let me delete this one. Yep. So it got here, broke out of this structure because that was a test here, resistance, and it became support. The same thing. So what you're looking for right now is another candle, and the candle that should be here would definitely be the opposite candle, which is the red candle, because the market is bullish now. I mean, it's bearish now. It's coming down. So let me put 0. So I'm looking for a red candle. Yep. And then when that happens, what am I looking for? Because I want this to be going up. I'm looking for a bearish engulfing candle. Sorry, bullish engulfing candle to the upside. So this time around, this is what I'm looking for to be able to take this trade. I'm waiting for this to happen. I'm waiting for a close above. So when it closes above this, one, I can take my trade. Take my trade right here. Yeah. That's my entry. I need this to be big. 2. And then this will be my stop loss, maybe a few pips below that. Then my target will be the next level that it gets to, which, if you can see, this will be your next target. Then if it breaks that above, you take it to the next target. That is me entering this market aggressively. So the only thing I am looking for to be able to enter this market is an engulfing candle, either a bullish engulfing candle or a bearish engulfing candle. Bearish to the downside when I anticipate the market is coming down, then bullish to the upside, anticipating market is going up. So, but the previous candle has to be red, but this one, the previous candle has to be a green one. Yep. So that is me. Okay, let me see if I can get me back to where my chart was. I'm gonna be able to go back. I'm just gonna manually delete it then. This I hope that was, yeah. So yeah. So that's one condition. Remember, I said we have aggressive method of taking the trade, which is looking for an engulfing candle on the higher time frame. We've just looked at it now. Higher time frame, aggressive method. Where is it? That was this one. Higher time frame. I didn't even bring it down. I just stayed on the daily. It came down, it retested, and I looked for an entry to take me down to the downside. Yep. So that's the next method. What do I need now? And if I decide, okay, I don't want to enter aggressively, I want to be more conservative, I don't want to take risk, is the next method is a conservative method. So what are you looking for the conservative method? You're looking for 4 different strategies, conditions to be met on the trading time frame. The trading time frame will be the time frame where you enter the market. Maybe your 1 hour, your 15 minutes. You do the analysis on the higher time frame, the daily, the 4 hour, the weekly. Then you enter on the lower time frame, which is your trading time, called your trading time frame. So these are the conditions to look for in your trading time frame before you can actually take a trade. One of it is the top or the double bottom followed by an engulfing candle. What do I mean? Sorry. Oops. So this is what I mean. Yep. So now the market does this. But mind you, remember the rule is that these 2 information has to be met before you even look at the lower time frame to look for a trade. You must make sure that these conditions are met, the retest of structure or retest of support and resistance. Now let's assume this is where I wanted to trade, because as you can see, this is where it is. This is a retest of structure. Let me use where I used before. I'm gonna delete this. Let me use where I used before. Okay. Let's assume this came back to this point. I saw this come all the way back, retest of structure. Now it came back up to this point, broke this previous low, and then came back and retested it. Support became resistance. When I see this, immediately I drop down to my lower time frame, either my 4 hour if I was in my daily, or my 1 hour if I was on my 4 hour chart. So assuming this was your 4 hour time frame, so that happened. What I'm now waiting to see is this. I want to now see this. I want to see something like this happen now. Yep. And then something like this. So if I see something like this happen, sorry for my handwriting. If I see that drop and then retest of that zone, that place is dropped from, what am I looking for now? An engulfing candle. Remember, I'm on my 1 hour time frame. I really wish this thing saves the last thing it did before. I don't have to draw it over and over again. So I'm looking for an engulfing candle. Yep. Excuse me. Let me copy it. This should be red. This should be green because it went up. Q. Change that to green. So this should be green. Why is it green? Because it's green because it's actually going up. See, it's going up. So what I'm looking for is a candle that is going up. Sorry for that. My tool is not very user friendly. Okay, I'm just gonna do this. Okay, so what am I looking for now? I'm looking for this candle to engulf this candle after that double top. So this came and did that, dropped that there, and then forms an engulfing candle, a bearish engulfing candle. This is where I enter my market. This is where I enter my market. I let the market finish. Then I jump in and at that. Then I put my stop loss above somewhere around here, the previous high that it created. The previous high will be given to me by this. Okay, hold on. I didn't know this was not showing. Okay, so the previous high will be given to me by this first touch. So I can put my stop loss somewhere around there and put this will be my entry once that closes. That is my entry. So that is example of dropping down to the 1 hour time frame just to be able to obey this rule. I look for a double top or a double bottom on my smaller time frame. So let's see how that plays out. This is an example of what I'm talking about. So let me say I drop down to my, let me see if I can find something to, okay, yeah. So look at that, look at this. We saw this initially, right? This is what happened here. And then what happened? It came back, formed another top here. It did this initially, yep, and then came back and did, yeah, this has been touching here, but it's not really, never really got a really good touch. Anyway, never really got it. But if I was drawing a zone, this would have been a perfect touch anyway. Let me do it as a zone. I'll show you. It's two entries you would have seen there. So let's assume I did this. I drew this as a zone. Yep. So if I waited, if I wanted to trade this, yep, I saw this, it came up, I saw that move. All of this I wouldn't have taken because there's a lot of indecision happening here. A lot of indecision, so many weak shadows. So the very first key ones I can see is this one right here. Came in, touched it. And then the next thing, after this touch, right, the next thing I see is this one. This would have been a good entry for me. Why? Because there is that engulfing candle after it. That engulfing candle after it. Now, if I'm not, I would have entered my trade here on this move. On the close of that candle, my stop loss would have been somewhere here because that's the previous high. Yep. So I'd ride it to where? To the next level that I saw. So I would have won this trade if I was going to take it. Now, if maybe I missed this move, look at the next one. A retest again, another double top, another top. That's a top, that's a top, that's another top. So some people could call this is one top. They don't really count this as a double top because there's no space in between. That's fine. Just wait for it to finish. Then if it comes back and creates that double top for you, then you can look for what? An engulfing candle, a bearish engulfing candle. And where's that bearish engulfing candle? That's this guy right here. This one. Yeah, that's your bearish engulfing candle right there. How do I know? Because it's fully engulfs this touch here. It touched there and then it formed the bearish engulfing candle. Where would be my target? Same place. See? Although it kind of came back and acted as if it's gonna mess up, but at the end of the day, it dropped to my level and gave me my winning. So that's an example of what we're talking about when you see something on your higher time frame. Let me see if I can find another one. Let's see. Break out and retest. Okay, then why don't I use this one? Resistance became or. Okay, let me use this one. Okay, resistance becomes support. Let me see if I can find it. Okay, so I dropped to my 4 hour time frame. Let's see if I can find a double top there. Where's my this is it. Okay, look at this right now. You see that thing happen? That's a top there. It formed a bottom somewhere. He formed one bottom here. He formed one bottom here. and then the next bottom would probably be somewhere around here. But as you can see, I can't find any engulfing candle, so I wouldn't even take any trade at this point. It formed another bottom here. I would wait until I find an engulfing candle. Nothing is happening. The first place I see an engulfing candle was here. And then why is it an engulfing candle? Because it totally engulfs the previous red candle that I saw. None of this engulfed the previous red candle. You know, none of it. Look at what happened. All of this is a bullish candle, but then it's smaller than this one. This is a bullish candle, but then it's smaller than this one. All of this, none of them, there's no red candle before it. So my entry would be until I see a bearish candle and an engulfing candle. Look at my engulfing candle right here. So this is where I'm going to take my trade. So I enter my trade. Oops. You see how important the rule is. So you need to see all of this. I would have entered at this point if I wasn't following the rule, because all I needed was just a retest, a double bottom or sort of, so I would have entered here. But because I'm not seeing an engulfing candle, the rule says you need to see an engulfing candle finisher. So there is no engulfing candle finisher here, no bullish engulfing candle. What am I going to do? I'm going to wait till I find this. And once I find it, which is this guy, so I take my trade, I enter my trade here. My stop loss will be previous low, which will be here. A few pips below that. This is my previous low. Yep. And then my target will be the next high. But my next high will probably be this one here, because that's the first place where the market turned back. My next one will be this one right here. Yep. So that's my next target, first target, second target. But this would have been a very fantastic risk to reward, because just a few pips, excuse me, just a few pips, and then look at the reward. Yep. So that's what I mean by double top or double bottom and then an engulfing finisher. The next one would be maybe to look for a simple pattern. If you don't find this, now doesn't mean that you're always going to find that in the market. If you don't find this, if you can't make this out in the market, look for a simple pattern in the market. Meaning that, what am I saying? Your higher time frame strategy, retest of structure, retest of support and resistance, then look for a simple pattern at or after the conditions. I will explain what I mean by at or after the conditions. At the condition will mean, maybe for instance, I'm here right now. This guy jumped out, retested. Let me use this again. Retested this. Yep. So what am I looking for? I'm breaking it down to be smaller time frame. To look for what? To look for a simple pattern. A simple pattern would be maybe like a flag. Let me draw that out. Let me use a flag. I should have even explained it on this guy first of all. Okay, so this is what I'm looking for. If it breaks down, let me delete this. Yeah. Okay, so now let's assume it came back and retested. What am I looking for this move? I'm looking for this move to happen. Maybe like a flag. Something like this. Oh Lord, this is not very user friendly. I can tell you guys. Still need to change this. Okay, we make this 2. Okay, so I'm looking for something like this. It touched it, did this, did this, did this, did this, maybe did this, and then dropped. So I'm looking for maybe this kind of move right here. You see that? That's an example of a triangle or a pennant. Some of you that trade it. So I'm looking for something like this. Sorry, my handwriting is not very sharp as it ought to be. So this is what I'm looking for. I'm looking for this thing to happen in the market. You know, I think next time probably gonna trade in view, because with trading view I can easily manipulate these things the way we want it. So this is what I'm looking for in the market. I'm looking for this move. I'm looking for a pennant to be formed. This is at that point where this came and we tested. At that point, it came in, broke out of that trend. I mean that support line, and then became resistance. So at that point, I saw a pennant, a triangle-like kind of pattern. Remember what we said is a simple pattern. So you need to look for a simple pattern in the market at that point. So I saw a simple pattern. Now I would enter my trade at that breakout. This breakout here would be I don't need an engulfing candle as long, because right now, if you see what is happening, the market is just being squeezed into that trend, that structure level. So what I'm waiting for is just for a breakout and close below, then I'll ride it down to my next zone. Yep. So that's an example of a simple pattern. Let's see if we can find something similar in the market. Let me see. At this point, let's see if I can see a simple pattern at this point. Okay. Okay, let me just delete this. So you see, it broke out of that. Okay, it broke out of this, and then hold on, let me find it. Okay, yeah, this is the one I'm looking for. It broke out of it, and then if you notice, if you look at it closely, look at this. That's an example of a pattern that has just been formed. Yeah. Well, that could be called that could be a flag sort of, but then the breakout is on the upside, is on the upper side. So it broke out, came back, and we tested, and what did it do? It jumps to the upside. Yep. So that's an example. I was really looking for a pennant, but like I said, it doesn't have to be a pennant. It could be something else. Okay, this is another example. This may be a pennant now. Okay, look at this. Yeah, so this is at that breakout, that retest. At that retest, that's an example of a pennant. So you just wait for this breakout to occur. Wait for this breakout to occur. This is where you enter your trade. But if you bring this down to your smaller time frame, you will get an opportunity. It won't be this large candle. You would see a smaller candle that would give you an opportunity to jump in. Then you can make this winning. Let's see. Let me see that happen. Where are you? Yeah, that's one. Yeah, exactly. So you would see something like this. So once you see this breakout, this is your opportunity to take the trade. So your first TP will be the next level, would not naturally to be maybe either here at the top of this level or the next level that you've identified based on your proper analysis of the past. So that's an example of a simple pattern. So once it breaks out of a zone, as it comes back to retest that zone, you would find your pattern there and trade it. Now the second one is when it forms the pattern after. There's an after, at, and then after. So what's the after? That is where we always look for a pullback. Let me go back to my 4-hour time frame. So a pullback would be something like this. Yep, something like this would be after. A typical example of something like this. Look at this. This would be an after, because it came back and retested it and then formed a flag after it had already jumped out of that zone. The next one will probably be something like this as well. I know right now it may seem very, very not very clear,
But if you use it a number of times, maybe when you pick up the video, you can watch the video over again to kind of have because the more you watch it, the more it comes to you, and the more you practice it. Although when I send out my charts, I would always do it based on this analysis, so you won't really have lost anything if you don't understand on this very first time that you're watching it. So the after, the before is, or at the trend line, I mean at the structure, is when this happens. Then after the structure is when it breaks out and then forms a pullback, forms a pattern, or pulls back out of it. That's an example. Let me see if I can find another example. This is another example of after. Again, it breaks out, then after it, this is another one. This is an after. So you now trade it to the next, sorry about that. Yep. So you now trade it to the next level. Let's see another after. Or this is an example of an after. Broke out of it and then forms a flag after it had broken out of that zone. Yep. And then it rolled itself down to the next level. So that's an example of a simple pattern. The next one is the shooting star. I'm really trying to rush here because I don't want it to be much more than 50 minutes or thereabout. So a shooting star or a hammer. Remember, these are reversal patterns. Shooting star and hammers are also reversal candles, sorry. So what does that mean? That means that maybe at this point, I'm just going to try and undo this to see if I can get okay. It means at this point, because I'm waiting for it broke out of that. Remember the retest of structure, retest of support and resistance. All of those things that I've identified, they can also happen in these areas. Retest of resistance. This is a test here. So if it comes here, you can look for it at this point. You can look for it at this point. Look for them at this point as well. Look for them at this point. Look for them at this point. Look for them at this point. Every point where the market comes back to a zone or retest a particular structure, particular level, particular support and resistance, look for these conditions to be met, then you can trade it. Now, I'm looking for a hammer or a shooting star. A shooting star would be something like this. At this point, I will look for something like this. Oh Lord, this thing. And then remember it's going up, so this has to be, well, sometimes it could be green anyway. So, but preferably if you can find it could be red, sorry. If you can have this as green instead, it's better. So this is what this is. Yeah, so that's an example of what a shooting star looks like. Yep. Oops. Sorry. So that's a shooting star. So what am I looking for? A shooting star and what? A shooting star with an engulfing finisher, meaning after a shooting star, this is what I'm looking to get. I need to look for this. Oops, sorry about that. Yeah, so this is what I'm looking for. So once I see an engulfing candle after a shooting star, now this strategy works for any other method of entering a trade. Once you see a shooting star, you know a shooting star just reverses a particular trend. If it's going up, a shooting star brings it down. Yep. The same thing in the same thing that a hammer does. A hammer, if it's going down, and a hammer takes it back up. So once I see a shooting star, what am I trying to do? I just make sure I put this. What am I looking for? I'm looking for an engulfing candle, a bearish engulfing candle in this case. That I enter my trade on this. This will be my entry. Again, I don't want you to feel that it's too much information, even though you don't understand it now. Watch it again, and then when we trade, we'll be using these strategies to enter the trade. So I'll always remind you, show you what to do, what to look out for, making reference to these strategies. So this will be your stop loss here, the previous high, and this will be your entry there. So you write it all the way down to the next level that you'll find on your chart. The same thing for a hammer as well. Let me draw this here. Remember, we have that level. We have this level happening right here. Yep, we have that level. What are we looking for now? We are looking for a hammer. And we know what a hammer is. A hammer is just the opposite of a shooting star. So we have that here. Right now, remember where we are. I just want to always make reference to it. We are at a support level right now. Yep, retest of structure, retest of support and resistance. And we've already, because we are trying to trade conservatively, we are trying to look for a shooting star or a hammer. So we have driven down, we have dropped it down to the smaller time frame, either the H4 if we're coming from the daily, or the H1 if we're coming from the H4. So right now on the H1, let's assume we're at the H1 right now. We're looking for a hammer right now. So this is what a hammer looks like. A hammer looks something like this. Sorry about that. And then a hammer looks something like this. So this is what you're looking for in the market. We want to see that happen. And then what does it say again? Oops. Sorry. Okay. So that's what I want to see. And what does it say? It says a bullish or an engulfing candle with an engulfing finisher, engulfing candle. So you see a hammer, and then what you want to see is an engulfing candle. It will definitely engulf the body of the candle, the previous candle. Okay, so that is what I want to see in the market. Then when I see this, what am I going to do? I'm going to put my entry somewhere around here. But mind you, notice what happened here. This is, if it was in a good, in the proper condition of the market, you would wait for this to break out of this zone, But let's just assume we don't have this zone right now. So once you see an engulfing candle, if it closes, make sure you enter your trade on this close, and then your stop loss will be below here, maybe a few pips. Maybe a few pips away from your previous low. So this is an example of what to look out for. Let's see if we can find something like that in the market here. Let's see. I'm on the smaller time frame now. Where am I? I'm on the, okay. Let me stay here and see. I can find. Remember, we retest structure. Let's see if I can find it around here where we retested structure. Drop down to your, look at what a hammer looks like. Yep. So is there a hammer here, somewhere here? Yeah, I can see one hammer. Can you see a hammer? That's an example of a hammer. You see? So a hammer, but is this an engulfing candle? Well, it looks like it. Why? Because the size is, I think, is a bit bigger than this one. So if we were going to take this trade, probably would have taken the trade at this point. But well, let's go to the one where we have where we can see it clearer. Let's see what else we can find. Okay, another level. Let's see another level. What about a retest of support? What about somewhere here? Let me see. So remember, conditions, it doesn't have to be this one every time. You can look for this, you can look for this, you can look for this. That's what it really is. Just look at the market, look at that zone. Any one of them you see, you can trade it. Let's see. Okay, so what are we looking for right now? We're looking for this one, because it's retesting up. We're looking for a shooting star. Where is it? We're looking for a shooting star. Can we find any shooting star around here? Well, not necessarily. This would have been, I wouldn't really call this a shooting star because it needs to be on top. So that's a failure there. You can look for something else. Is there any other shooting star? Nothing like that around here. So once you don't find it, look for any other strategy. any other one. Could be the other pattern, a simple pattern, or a double top, or a double bottom, or a flag. All of that, like I said, I will identify them as the market process progresses, or you can even do back test it, put this strategy into, try to practice it, watch the video over and over again, then practice it. The last one is the advanced pattern. I know we don't really trade this one that much, you know, we don't really trade that. So I would really for now say you can leave that for now if you pending when we start trading advanced patterns. But for benefit of those that already know how, what you're really looking is the same principle. Once this comes to this level, so, you know, right now we've identified if we were looking for a simple pattern, a flag, a pennant, or whatever, or the next one was looking for a shooting star. Now, instead of a shooting star, you could decide, you could now look for, let me do this. Take this out, take this out, take this out. Okay, then delete the rest. So when it comes here, so instead of looking for a shooting star, if you can't find a shooting star, you can't find a simple pattern, you can look for an advanced pattern. An advanced pattern could probably be what's it called now? A bat, or a what's it called? You know the names, a cipher, you know, or a Gatli, whatever pattern forms here. Oops, this doesn't. Let me put that here. So I'm just trying to, it may not be the sweetest looking pattern. So once this forms at this point, then you can now trade it to the next level. You know how this, for those of you that trade the patterns, trade it to the next level. Whatever pattern this forms, could be a cipher, it could be, let me see if I can find okay, if you go to a library, you have them here. Patterns all here. If you want to trade it, this here they are. You know, so it would be bearish Gatli, bearish bat, bearish shark, bearish star, whatever. They are all here. If for some of you that trade it, you have it in the library. You have some of them here as well. How you measure them. Yep. But these are what you really look for in the market at this point. Once it drops, as this is going back to this point, you're looking for an advanced pattern at this point so that you can ride it down to the downside. But because we don't really trade advanced pattern, I would say forget about advanced pattern for now, you know, but just concentrate on this one. You know, even though you want to only look for double tops and simple patterns, it's all good. Or you want to look for only simple patterns and shooting stars, it's all good. Or you just only want to stick to simple patterns. I know some of us that only look for pullbacks, what's it called now? Flags. You know, once we get to that level, get to the particular level that we want to, all we look for is a flag, you know. So if it comes here, breaks out, it comes to this level. Like now, if this comes down to this level, we're going to probably put that into trade for this pair now. If it comes totally to this level, I'm going to drop down to my 4-hour time frame to look for either a simple pattern here, either a flag or a pennant, or look for a hammer here. What am I looking for? The hammer to probably retrace, take me back here. Remember I said it's probably going back here. Remember what I said, that this guy is going back to the top. So I'm probably going to look for a hammer here to take me back. Yep, just like we did here. You know what we looked for here. So I'm going to look for this kind of setup. So I look for a hammer, and then an engulfing candle, a bullish engulfing candle, take me back. If I don't see that, I look for a simple pattern, maybe a triangle, that's a pennant, or a flag to take me back there. You know, or if it comes in and already started moving, all I'm looking for is a pullback or a flag or a pennant, whatever it is that would give me a condition of entering. But I would only look for that on the smaller time frame. Once this comes in and touches this level, I drop down to my smaller time frame and look for what to, like, look at what happened. This broke out. Yep, it broke out. This was resistant areas. Yep, it were resistance areas. They were testing these areas. But what happened here? It broke out. Remember, the rule says it may be simple pattern at or after the conditions are met. This is a simple pattern after the conditions. So it came in, it touched it, broke out of it, and then dropped the flag, dropped the pennant. Yep, so that pennant. So this is an example of what we're talking about. Yep, and then what did you see happen? The market broke out and then kept dropping. Yep, so that is an example of what we're talking about. So right now, what am I looking for right now on this trade? I want this to drop to this level. I'll be on my higher time frame. I can even stay on my lower time frame and just watch it drop. But what am I looking for? I'm really looking for a hammer to be formed here, or another pattern to be formed here. Then I would ride it back to the upside. Yep. So in summary, first of all, my higher time frame conditions that need to be met. Higher time frame is 4 hour, daily, weekly, monthly, whatever time frame you trade. If you start from the daily, so it means your time frame, your trading time frame will be the 4 hour or your 1 hour. If you analyze on the 4 hour, it means your trading time frame will be the 1 hour or the 15 minutes time frame. So I identify these two key conditions. There are three conditions, but we're treating the two for now. The retest of structure. By retest of structure will mean it comes in, it creates a low here, jumps up, and that's a low here, meaning it's a support. We know support. It creates a support here. Yep, creates a support here, and then what happened? It jumped up, and then on a return, it broke that support. And then when it broke it, what did it do? Came back and retested it. Support became resistance. This level right here became resistance. So that's that's the first condition met. So at this point, I begin to look for my entry opportunity. Yep. So the next one is a retest of support or resistance. Now this is it. It broke that, came up. It formed a low here. That's a support here. Broke it, came back and retested. Then what happened again? It retested here, retested here. So I could look for my entries at this point. Yep, I could look for my entries at this point. I could look for my entries at this point. I could look for my entries at this point. So that's what it means by retest of support and resistance. Yep. Now, the next one is, okay, that's retest of resistance. Now, retest of support would be probably something like this. This is the support. It retested it, and it retested it. This is another support. It retested it here. Yep. So the same thing is possible here. If you look at the upper side as well, whatever you saw on the left can also happen on the right. This was resistance, which became support. Resistance, which became support. Resistance, which became support. So once these higher time frame conditions are met, then I can begin to trade, enter the market. And now there are two methods of entering the market: an aggressive method or a conservative method. The aggressive method, what are we looking for? A higher time frame engulfing candle, meaning that when I get here, when this happens, retests, jumps up and drops. If this retest happens, this is where I'm looking for my engulfing candle. I'm looking for an engulfing candle to form somewhere here. Then when that engulfing candle closes, then I can take my trade and put my stop loss somewhere around here. That's aggressively entering the market. The same thing happens here. I can look for my engulfing candle on this retest, look for my engulfing candle on this retest, look for my engulfing candle here, my engulfing candle here. So for every retest, look for an engulfing candle. So maybe something like this. I would look for an engulfing candle. So if I can't find, see, there wasn't one to find. It came in, retested. Remember that double top I told you about? This is it, an example of it. But then I could look for an engulfing candle. I didn't find anyone here. This is the one I found, this long one here. It's absolutely fine. I can still enter. I entered the trade at this close of this candle. When it closed, I took the trade. Let me make this right. And then put my stop loss, previous high, which would be here. Some point there. And then what happened? It came up, and then dropped massively to this level. Yep. And what does it do? Okay, from there it went back up. So that is if you were looking for an engulfing candle. Yep. So let's say you were trying to trade this as well. It came back, it touched this, came back and touched this. What am I looking for? Higher time frame strategy, aggressive entry. What am I looking for? An engulfing candle. Engulfing candle. Higher time frame engulfing candle. Is there an after the test here? Is there any other engulfing candle? This is not an engulfing candle, so I'm not entering the trade. This is not an engulfing candle, so I'm not entering the trade. This is an engulfing candle. Why? Because it totally closes above this, the red candle, and I enter the trade. My TP will be the next zone. Let me see if I would have won this. So if I saw this as my next zone, would this have been a winner for me? Now probably, well, maybe I would have, if I put my stop loss in, this would have still been, what is it called now? Wouldn't have been a massive win, but a win nonetheless. Because if I entered here, how many pips does this give me? Okay, not very neat. 15 pips for scalping. Anyway, but that's just what it is. Look for an engulfing candle. Like now, I found an engulfing candle here, but you see what happened? It came back and stopped me out. Came back and stopped me, but not a problem. I could wait and find another entry because I'm so sure, because it didn't close below it. So it stopped me out. I entered on this candle right here, but I got stopped out. It's all good, because this was where my stop loss was. So it wasn't a massive loss anyway. I put my stop loss somewhere around here. Remember what I always say, you have to put it below. So what happened? I wait for another engulfing candle. And what was the engulfing candle? This wasn't an engulfing candle. Why? Because this was not a red candle. This was an engulfing candle. You see? Sorry, this was the engulfing candle because this was the red candle. So I entered my trade here, and then my stop loss would be somewhere around here again. And then what happened? The trade went and then went to the moon, then went to that level. So that's aggressively entering. Then to enter conservatively, make sure you look for a double bottom or a double top at the point where you have that retest. At the point where you have that retest. At the point where you have that test. At the point where you have those tests. Look for a simple pattern, either a double top or a double bottom, or a simple pattern, like I said, or a shooting star or a hammer at this point. Yep. So with that, I come to the end of this training session. Like I said, I will give you whenever I identify trades, what I'm going to do is I'm going to put these strategies in them so you can see how they play out. Like I'm really looking forward to trading this one, when the market opens, as long as it doesn't gap. So I will see what happens here and I'll send you the trade, send everyone the trade. All right. So thank you. That brings us to the end. So I'm going to stop the recording now so I can take questions.